We usually make videos on trades that we take, so for a change, I thought it'd be a little interesting to make a video on a trade I didn't take, which was the short in the Nasdaq. But let's talk about the reasons why I didn't take them. Now, today is February 12th, 2020, and we've noticed in this week's activity so far that the NASDAQ has been the first symbol to often trigger, and then it continues to go up. And the sign as to whether or not we're going to have this reaction has been given to us by gold futures. So typically, if we see that gold is in a spot to start to fall, then we would expect the indices now to continue to go up, right? Usually when we're looking at shorting gold, we've been looking at going long the indices. And this pattern has been pretty fruitful as of recently. So at this current point, when we had this opportunity to short right here, gold had been rallying for quite some time. So to me, that is essentially saying that gold is a little bit stronger while Nasdaq has also been strong. Something there doesn't add up, suspicious, and therefore I'm looking to sit out this trade. Another reason is also the distance, the proximity we are on the S&P from any side's volatility box lines. Same thing with the Dow. We're nowhere close versus in the Nasdaq, you're telling me that we're facing this much more volatility. Suspicious reason number two. Right. And then if we also just take a look at the Russell futures, which doesn't necessarily correlate with the NASDAQ futures, but has been a little bit interesting, right? Days that we've seen Russell have the slow grind up higher along with the S&P, along with the Dow, but you have the NASDAQ kind of going a little bit wilder on one side along with gold. That's another reason to try and protect your capital. Now, this trade, if you were to take it, would be a risk of right around 17 to 20 points, depending on your risk tolerance. That takes you to right around the 96.30 mark. Let's call it 17 points. And the bare minimum that you're looking to get is that same risk to reward, right? So the same 17 points. Now, if we come down here, we see that we've fallen down to 13.5 before having this temporary bounce up higher. We are starting to get two edge arrow signals that are populating across the board, right? In the S&P, in the NASDAQ futures. Nothing in gold, nothing in the Russell, nothing, well, just one in the Dow so far, really. And then crude has given us a nice cluster of three, but really not near a volatility edge. So let's continue to monitor these markets. We'll see if we made a mistake by skipping this trade or if we did the right thing in terms of skipping the trade based off of the clues that was given to us by our sister markets. I'll pause the video here and let's take a look once price breaks either above or below to see which way was the correct way. And one more note for those wondering what I would have preferred gold to look like in order for this NASDAQ trade to have been valid for me, or at least worth taking the risk and having the probability stacked, is while the NASDAQ futures were ripping higher, if gold was ripping down lower, and both were approaching the volatility box lines at right around the same time. These two markets have been working, at least whenever they do work in tandem, those trades have been really, really nice compared to when we have these sorts of divergences. There's often times in which that trade, it's more of a coin toss, a 50-50 coin toss, and that's not really a bet that I'm willing to take at this moment. Quick update, we have an edge signal arrow that populated on gold with the bearish signal. So what I'm hoping in my head, the ideal scenario would be gold starting to hit our cyan entry line right here, while the NASDAQ hits our second layers of this volatility box entry line, and then we get our edge signal arrows populate, and that would be a really nice trade. Quick update, excuse me. So far it seems like the Nasdaq tried to get going, but started to reverse. And then gold so far is falling, but hasn't fallen enough for us to start to get excited yet. So far we're just watching. Another thing that I thought was semi interesting was the fact that we're near the 9600 level on Nasdaq from where we're starting to bounce. So that could be another reason for why you may have skipped this trade, or you may have started to take profits early, and in which case you had a couple really, really nice reactions for scalpers. And then another thing is the idea of clusters, once again coming back to life right here on the Dow futures, in which you see one, two, three, four, five edge signals all giving us a bullish sign. But to play devil's advocate, you do have 3 on the S&P giving us a bearish sign. I'm still waiting for gold to start to give us the clues to get excited about participating in any of the indice markets, either long or short. And then another possibility that may happen is if gold starts to come down anywhere near here, it gives us an edge signal to go long, while the Nasdaq is really just traded sideways, right? That could then make the Nasdaq short that we had right here valid because even in this candle so far, we haven't hit our 17-point target. So that's another possibility that could happen. And I'd like to call that out beforehand just in case so we can start to observe for clues if anything similar starts to happen. All right, so another update, we're starting to see the Nasdaq really get going here, and then the S&P and the Dow perked up as well. So let's come into our Forex factory real quick and see if there's any breaking news. And let's actually just bring this over to the screen. Nothing so far. We'll keep our streams on and we'll keep this on the side, but nothing that calls for our attention yet. It was just crude inventories. And that was a while back. So let's take a look now to see what happens. Our outer cloud layers is one level that we're looking at, and then the gold cyan entry line is another level that we're looking at. And we're looking for both of these to start to work together in harmony. We'll keep the video running this time, but probably just increase the speed so we can monitor price action. Okay, so we're seeing the Nasdaq really start to perk up, new high for the day, or at least I think this is a 3-minute 5-day chart, so a new 5-day high. So 9618.50 is what we're currently at. Gold still hasn't fallen enough, so still being disciplined, still staying patient, and still watching. Now I'll go back to hitting pause on the video until something happens in terms of whether we hit this level or we hit our gold levels or some other interesting clue. So far, it's looking like the Nasdaq is beginning to turn, but we're still not in any position yet. Still waiting for an actual edge signal to happen to give us a little bit more confidence. And for us, that's closer to the 9621.79 level so far. So let's keep an eye out. Gold is starting to perk up a little bit as well, which again, not something we like to see. I was hoping to see gold continue to go down while the Nasdaq goes up, but it's really just this candle so far that you see the harmony is coming back a little bit. One more position update. Nothing too eventful has happened yet. Nasdaq did start to fall, and then we had all of the indices really fall, while gold mostly stayed flat for the most part. We did have a few more signals start to populate, but really it's once we cross an edge that those signals start to have some sort of value to us. So right now we've just been watching for the most part today so far. Even crude with the inventories report didn't give us anything too exciting. Not at least after the actual report came out, just in that morning volatility, and that was about it. So let's keep an eye out, see if anything shapes up into the close. We still have about 2.5 hours left, so we'll see if something happens. All right, let's do a final position recap for the day. So from the point at which we were a little excited about, gold never hit any of our volatility box edges, so no trade there, and nothing across the board in the indices. So it ended up being a relatively muted day in terms of volatility, but we did have our game plan, and hopefully this video helped to at least give you some sort of an insight as to what we were thinking and how you could have approached this NASDAQ trade. Now keep in mind, if we zoom out, this NASDAQ trade never did stop out, but it never also hit its target. And I think using gold was one way to avoid racking up additional commission costs, dealing with this sort of heat, right? Because that also forces you to have to now manage your emotions, and that takes effort and work on your side. So By using gold as a proxy, we're able to avoid this trade. For those of you that are scalping or scalpers, you can start to use these edge signals to get some profits off, and the 9600 mark here was your key level to help you find targets. But apart from that, we see that Nasdaq has really been inside of a range for a major part of the day, right? At least the range that we were looking at when we started this video. We said we'll report back when the Nasdaq breaks price one way or the other, either 17 points from our blue cyan line to the positive direction or 17 points in the bearish direction. And the way the day ended, we couldn't break through 17 points on either side, which I think should be telling as to what happened to volatility the rest of the day in the marketplace, as both of these ranges were less than 17 on the NASDAQ. But I hope this video helped. I hope this commentary during live market hours helped, and we'll continue to do some more of these if people find it useful. All right, take care, everyone, and we'll see you in the next update.